But look at the weekly performance, and you would see that the stock has done very well. But this is a yearly performance. Pull up the weekly performance. 28% in a week. Mr. Bhatia, thanks very much for your time this afternoon. We were just discussing, Anisha and I, that you were there on this very show 10 days back to discuss results. What has happened since then? The markets seem to be re-rating your stock. Is there something about the industry or about the company which market is, coming to terms with now? Is it a very increased demand which lies ahead? What exactly is happening? Because not only but there's a complete new way in which Street is looking at packaging stocks.
I think the fundamental reason is that the sector as a whole was sort of undervalued. The whole sector is available between 4 to 5 EBITDA multiples, and that's really low. Plus, now for last 1 year, with the increased capacity being available, so there's been a bit of pressure on margins, and I think all of us, feel that that's the bottom that it has hit, and from here on, it's only one way up. BOPP, in any case, the margins are good. The PET is the one which has some demand supply mismatch, so that's now coming off, and I'm confident that in the next quarter or so we'll see much better both pricing, volumes, and the margins in the PET. BOPP is still doing fine, and the BOPP is expected to do better till 2026 when there will be some additional capacities coming in. So overall, I think the sector got attention because it is trading at a very low multiple, and obviously it makes sense for the sector to. Plus the coming festive season, I think the packaging, we've shown that the demand has been good. In fact, for us, even on the packaging film side in India, we have a 22% growth after we commissioned our plant. So that's a 22% volume growth in the Q1. Packaging into aseptic or the flexibles have also done pretty well for us in the first quarter itself. So overall, I think there is a sort of a realization that it can't get anything worse than this. So it's the time to look up, and probably that's the reason the markets are now focusing attention on something which has hit a bottom.
Making a very valid point, Mr. Bhatia. I was just looking at, the valuation and also the performance for the last 1 year. Nahar Poly, Cosmo, Polyplex, Jindal Poly, Uflex, anywhere between 30 to 50% down in the last 1 year. So that is the amount of pessimism which you have gotten. But we'll move ahead. You just said that the coming quarter onwards, is it the coming quarter or the quarter after that when you see volume and pricing both improve together? Are you referring to Q2 or Q3?
We should be Q3 for sure, and it could be part of Q2 also. But Q2, we've already seen July and August, so they're pretty much almost at the same levels as the Q1 is, though BOPP is a bit better. The volumes on the packaging side are better. So it's only the PET BOPET which is not to the industry's satisfaction. So I think next quarter we'll see a better performance from that business also.
He's going to see a better performance. I just wanted to scratch that point further when you said the margins have bottomed out, because yes, from the 18% levels that we used to see last year, it's now down to 9%. But since from Q3 onwards you're talking about a recovery, what could the margin profile be? Let's say the exit rate for FY24, could it be, let's say, 14-15%?
14-15 is difficult. I think this will happen gradually, maybe go through FY25 also. But we'll definitely see at about 12% or so.
Percent is going to be the exit rate that you're talking about, FY24. The other thing I wanted to talk about was that you were considering listing the Dubai holding company in the US market as well. Any progress on that front? And what's the rationale of that?
I think the time is still not ripe in the US markets for a listing, given that we are seeing the increase in the Fed rates, and that's not very conducive for the equity markets. So we will surely have a close tab on that because we've done a fair bit of work on that, and as and when there is an opportunity, we look at that. I think the multiples overall valuations that we are overall talking comparables for a US listed companies in the same sector are much different from what we see in India. And given that we are a global player and we have facilities almost except Southeast Asia, we have facilities all across the world. So we should also be getting an international level valuation multiples and all that, and not sort of India specific things. Plus, if you see our performance vis-a-vis the competition, now our advantage, which we've been saying all throughout, that we are not one single product company that we packaging films. So we are into multiples businesses, which includes flexible packaging, aseptic packaging, engineering, chemicals and adhesives, holographic films, cylinders. So all these, while one sector is down, and that is the packaging films, and that too the BOPET packaging films. But we see, because of this diversified nature, when we compare ourselves with the competition, we find that we have a better risk profile as compared to the single product companies, and that's what is clearly out in this quarter results, that when the chips are down in the packaging films business, if I were to remove the sort of the impact of some foreign exchange fluctuations in this quarter, in the standalone results, if you see, our margins are still above 13%. In fact, it is 13.4% in the first quarter if I were to negate the the notional loss of from the FX fluctuations. So that's pretty healthy, and we would love to see that improve by surely by the packaging films.
Mr. Bhatia, I want to come to that point once again, because I did see in the quarter gone by you had some forex impact, all of that. You're also undertaking expansion. So if I put together 12 to 24 month picture, when your top line run rate of almost 3,300 crore a quarter goes to 13,000 crore, 14,000 crore on a full year basis by 25, your margins go back to say 12-13%, or do you see more upward bias in the 12-24 month period?
Next, as I said, exit run rate, we'll focus on 12, and then 24, 25 is what we'll have to sort of figure it out. So if 24, 25 we can exit at about 15% or so, I think that's the
sure. Let's take conservatively 12-13%, 15% is a bit far away. On a 12-13,000 crore top line, are you confident of making that kind of EBITDA going forward, almost 1,400 crore EBITDA, 1,500 crore EBITDA in the next 12 to 15 months?
I think we'll surely do that, achieve that. I don't see any challenge in achieving that number. In fact, our internal targets are much higher as compared to that, as we also commissioning our increased capacity in the aseptic packaging from 7 billion packs to about 12 billion packs, commencing from the next financial year. We'll also have a better margin profile going forward in the packaging films business as we commission our captive raw material, the PET chips plants in Panipat as well as in Egypt. So they'll give us a better, margins in the packaging films business as well. So overall, while I'm not looking, because we've not done any capacity expansions from a point of view except this aseptic packaging in our packaging business or in the flexible packaging business. But aseptic packaging is the one which is going to give us the revenue boost, and the margin boost is going to come from the higher revenue from the aseptic packaging as well as our backward integration into the chips business.
Bhatia, just before I let you go, a quick word on the balance sheet as well, because given the capex plan that you're talking about, there's already debt on books of almost 3,000 or 3,500 odd crores. Is there any plan to pare it down?
So there is a natural amortization which is going to happen, which is to the tune of say about 500 to 600 crores per year. So, and with no substantial capex in mind from here on, I think we will sort of look at not increasing our debt beyond these numbers.
Mr. Bhatia, for making time and speaking with us about the business prospects, the fact that you're looking at 12% margin on an exit rate and recovery at least from Q3 onwards, that's something that the street is liking, and no wonder the stock is up almost 25-30% this week itself. But on that note, we are slipping into a very short break. Don't go anywhere. When we come back, we'll